Check, please.
Welcome back. Paul, Mo, and I own Intel. We've loved this company for a long time now. We'll show you the numbers, the colossal collapse from their 2000 era down to today. We'll go over the financials and show you what you could be paying for this company moving forward using our stock analyzer tool. I trust Paul and Mo. They own and operate over $100 million in assets, and they'll walk you through the process of investing in a company like Intel. So, Paul, get after it, man. Tell me what your thoughts on this.
All right. Thank you, Seth. Guys, follow us on our Instagram account. Everything Money Investing is growing like crazy. And follow Seth, Mo, and I. We have great personal photos. It's not money driven, but it's personal. You get to see that we are real people. And I have real emotions and I really care. So before we go any further, also, Seth, let's look at Intel's stock price. Look at this.
Yeah, so when we pull this up, this baffles me. And really, it's a speaking point of our entire show we've been saying for a long time, and how you stress the idea. Once you pay for this puppy, you're in it.
And if you overpay, you can overpay for great potential. Back in 2000, guys, Intel was one of the, I remember watching a TV show in which a model and a businessman were trying to date. And he was like, show me your portfolio of pictures. She goes, show me your portfolio of stocks. And he starts showing her, he goes, and she says, do you have Intel? He said, yes. And she jumps on him to make out with them. And I'm like, guys, the company hit $80 a share. And since then, 22 years later, it has done nothing. If these YouTube hypers were around back then, they would have said, this thing is going to the moon. And if I said to them, guys, it's not going to touch this price for 20 some years, he would say, you're crazy. But this is the point. If you overpay, and by the way, since then, Intel's revenue and profit have almost tripled. And yet the stock has gone nowhere because you can overpay for growth. If I told you back here that the revenue profit would triple, the average idiot investor would have said, oh yeah, this thing's going to triple from here. But guess what? It didn't. It stayed sideways the entire time. Actually, that didn't stay sideways. It plummeted, stayed sideways, then started to rebound. So that's the whole point, guys. That's what I'm saying when I say you can overpay for potential in future. Don't get caught up in the hype of this.
Paul, they're building that huge Intel complex in Columbus.
Now they are, yeah. So Intel just announced a $20 billion factory in Columbus area, which will be 3,000 employees will be brought to the area. So thank you, Intel.
For choosing one of the fastest growing cities around. Like
yeah,
Austin.
It's a great, listen, everybody dogs Ohio so much, and I'm just like, okay.
Get into the financials of Intel.
So guys, Intel, let's go to our 8 pillars tool. Oops, wrong one. 8 pillars. Intel, spoiler alert, I'm a shareholder of Intel. I like Intel. I've been buying since $45 a share. I didn't sell it when it got to, how high did it get? It got pretty high.
Same
68
for me.
In the last year. In the last 5 years. Yeah, 68 was about the high. I didn't sell. I still think it's a $78 stock in my opinion. So guys, market cap, $226 billion. Pillar number 1, we want the 5-year PE under 22.5. Guys, it's 12.4. Check mark there. Pillar number 2, we want a 5-year return on invested capital greater than 9%. It is 12%. So this shows you how they do a great job of making a return on the money invested in the business through debt and equity. Okay, guys, dividend. They paid a 2.5% dividend yield, but don't be the sucker like everybody believing that dividends are safe just because they pay it. There are things called dividend traps. So what you have to do is you have to compare it to their free cash flow. Last 5 years, just go 2 lines up in our software, 15.7, and last year they had 17.3 billion. They're barely eating up 1/3 of their free cash flow for dividends. I'm assuming that's pretty safe then. Pillar number 3, we want revenue growth. So we go to income statement on our software. We go back 5 years, 62 billion to 78.5. Check mark there. All right. 10 years ago, they did 53.75. It's not a fast growing business. They have huge market share, but I think that the story on this is quite exaggerated from a lot of investors.
Profit growth?
Pillar number 4, we want net income growth positive over the last 5 years. 5 years ago, they did 13.85. Last year, they did 21.1. Check mark there.
Does the recent few years just look like a fluke, Paul?
Well, that's the thing. It hasn't. I mean, look at this. 13.85, 15.2, 19.34, 21.95, 21.1. Now, granted, I do think there are long-term concerns on the growth potential for Intel. But you got to remember, again, that usually people are being dramatic and it drives the price of the stock down. All right, pillar number 5, we want shares outstanding staying the same or decreasing. Guys, if a company has 10 shares outstanding, you own one of them. You own 10% of the business. If they buy back 2 shares, you now own 1 of 8 shares in the company, 12.5% of the business. So you just owning that 1 share and keeping it They rewarded you by giving you more ownership of the company by buying back shares. So scroll all the way to the bottom of the income statement. At the end of year 6, they had 4.73 billion shares outstanding. Now they have 4.06. That's almost 20% decrease in the number of shares outstanding. It's like 17% or something like that. So check mark there.
How about their debt, Paul? Pillar number 6.
So for debt, guys, we go back to the main page of our software. We go back to that 5-year free cash flow number, 15.7. We multiply that by 5, and that equals $78.5 billion. We want their long-term liabilities to be under $78.5 billion. So we go to the balance sheet.
What do you think?
I think it's going to be less than. Scroll all the way to the bottom, 48.3. So a lot lower. Based on this number, they can pay off their entire long-term liabilities with 3 years of free cash flow.
If you're following along at home, you might be new to this. Maybe you've never invested in Intel. We do zero due diligence. We look at the numbers. So a lot of other videos, they might be telling you how great companies are, how much they're going to grow, what they might do in the future. Our first initial screener is this 8-pillar process, which you can have. We'll get to it. And all this math is done for you quickly. Paul, keep going. Let's get to the nuts and bolts of this, which is the free cash flow and how we determine a market cap.
So we go to the cash flow statement here, guys. Free cash flow is cash from operations less your capital expenditures. And you can do one of 5 things with that. You can buy back shares, pay dividends, pay down debt, make acquisitions, or reinvest back in yourself. We have added this line to make the math easy for you. For the people who use our software, 5 years ago it was 11.78 billion. Last year was 17.3. Check mark on growth. And our final metric is we take the 5-year average free cash flow of 15.7. We multiply it by 20 to come up with a price for the company as a starting point. Doesn't mean if the market cap is less than this, you automatically buy it. So 15.7 times 20 is $314 billion, and the actual market cap is $220 billion. That's a massive check mark there. So just so you guys, you probably see a lot of math here going, oh, this is so confusing. Our software, beyond just the data, what makes it great for you is you have the 8 pillars tool right here. This is an 8 check mark. This is an 8-pillar thriller right here. All 8 check marks. But again, does that mean we automatically buy?
Yes.
No.
Sorry.
It does not mean that. I've bought companies, I've ignored companies that have all 8 pillars, and I bought companies that have all 8 X marks. Is X mark? No, X mark is not it. So what we do now is every investment is the present value of all future cash flow, correct? But we don't know the future, so we have to make assumptions. That's why we created a stock analyzer tool. The most important part of our software. Everybody in our comments says, oh, I can get the same data on Yahoo and Google Finance. You are wrong. You don't get the 8 pillars. You don't get the stock analyzer tool. So let's go see what we'd pay, because the stock analyzer tool will take all of our assumptions about the future and tell us what we should pay for the company today. So years of analysis. I want 10-year of analysis. You can do between 1 and 20. Now, revenue growth numbers. I'm going to be conservative and call it 0, 2, and 4% revenue growth. Profit margin, I'm going to go 23, 24, and 25%. Free cash flow margin, I'm going to go 20.5, 21.5, and 22.5. PE, I'm going to go 12, 14, and 16, and same with the price of free cash flow. And finally, my desired return of 12.5%. Why do I pick 12.5%? Guys, you can invest in an ETF and get 9 to 10%. So if you're going to invest in a company and give yourself ample margin of safety, 12.5% is a great start, because you can never change the price you pay for a company. The second you bought that stock, that is the price you've paid for it. So you want to make sure you get an ample return on that money, because you never, ever change that. The company's going to do what it's going to do. Hit the analyze button.
What you got? Ooh.
High 30s, high 40s, mid 60s. That's what I perceive with the margin of safety to be there. So when I say I think the company is a 10 to 20, a $70 to $80 stock is what I always tell people. So desired annual return of 10% would be the normal market number, and that's where I'm at. I'm at 70 to 80 because I do believe those high growth numbers are there. Those 4% growth numbers are potential there. So guys, when you're doing this analysis, again, your job is to find good companies with great balance sheets. Even if they don't have a lot of future potential, if you pay a cheap enough price, it's just the same as when people sit there and say you can't pay a cheap enough price for a company that's not growing, that's incorrect. Just like you can pay too much for a company that is growing like crazy. So be cautious and conservative when doing your analysis.
We've had the grand events in this show where we've interviewed some of the best investors in the world, Paul, and they all say the same thing. It has to be obviously cheap, like just So obvious. And it's almost to the point where maybe even more more conservative than you, Paul. I mean, like so obvious that it's an instant buy, right? If it's not this obvious, then it's like,
Yeah, and I don't think Intel is that obvious to most people, but there are a lot of big value investors out there like Seth Klarman and other guys who put after we bought, not because of us, but it was nice to see that later on they're like, oh, yeah, Intel's a good buy. I just think Intel, because of its market share, its free cash flow, everything it has going for it, I still think it's a great buy, and I don't think it's going to company that's going to sell for 5 times earnings anytime soon. And I've been buying since I buy everything below $50 on Intel. Anytime it goes below 50, I'm buying. And I bought as low as 40, and I sell puts at high 30s and low 40s.
If looking at the financials really speaks to you, Paul will tell you how to get our software. You can have this in your hand on your phone as soon as you sign up. And Paul, tell them how to get this.
And the reason we created all this software is because as we made videos of the company, people would reach out to us and say, hey, how do I analyze my own companies in order to do the analysis versus waiting for you guys to make a video? So we created the software. You get everything you saw here. You get everything on the main page that's also coming soon, right here to the right side. You get 30 years of financial data. You get access to Seth, Mo, and I in our exclusive Everything Money chat here at the top, EM Community Chat. You get the stock analyzer tool. You get real estate calculator, retirement calculator. You get 8-pillar portfolios, which allows you to put up to 50 stocks in a portfolio to tell you how all 50 companies do at once, or 20 companies, doesn't matter. But exclusive daily content. We make 1 to 3 videos a day that we post. They're called A Few Good Minutes. They're wonderful. Seth, Mo, and I make them. But most importantly, guys, is this EM community. We have over 6,000 people that constantly talk in the community about their investment ideas, because the great thing about the internet is it allows all of us who have a certain way of thinking to come together and talk about our investment ideas. We have people in there saying, hey, I'm looking at blah, blah, blah. I'm looking at Ford stock. What do you guys think? And people have a good, engaging conversation about it. This is all available, all in our tool, all of this for about $1 per day. Sign up now. $1 per day gets you all of this. For the price of a cup of coffee, you get all of this, $1 per day. Sign up. And the best part is, whatever you sign up for today, that's your price that's locked in, because the price goes up every single month. But you're locked in at the price you sign up for today. So $1 a day gets you all of this. No-brainer, guys.
That's our take on Intel. Follow along. We'll update you if we buy more, if we sell one of our favorite companies, and we'll certainly talk about it in the future. Fondle the thumbs up on the way out. We'll see you in the community. Thanks for watching.